Right now, South Africa has secured a commitment for duty-free access to Chinese markets, and that's by the end of March. Very significant move here. The two countries have signed a framework agreement, which is a wide-ranging pact covering trade, investment, new energy, as well as multilateral cooperation. The Department of Trade says it strengthens economic ties between South Africa and China and comes amid a drive to seek further opportunities due to the uncertain global trade climate. Let's talk more about this with Economist Mirriam Altman, who joins us now. Doc, thank you so much for the time. Appreciate it. It's been some time, but one thing is for sure, South Africa's needed other places and other avenues to look for trade. How good an avenue is this one? Good evening.
Good evening. Good to be here, and nice to talk to you again. So, look, China already is a very important trade partner, already more important than the U.S. This is a very important trade deal. If the behavior of the U.S. is provoking this kind of agreement, then all the better, I guess. I mean, it's too bad, but this was long in coming. Our trade deficit with China has been growing quite substantially. So it was maybe like $1 billion in 2000, and now it's about $10 billion. So if you see what I'm saying, their imports to us far exceed what we sell to them.
Yeah.
And we mainly sell to them commodities like minerals, and they mainly sell manufactured goods.
Yeah.
So,
and in many ways, I mean, they've got a mineral base of their own, right? So they've never really needed too much, and they take minerals really from across the continent. When one takes a look at that, are we not creating another kind of over-reliance here? Something we're trying to avoid with the United States, avoid even with Europe. Are we not building up coffers too much with China that creates an over-reliance?
well, look, China's the second largest economy in the world, and it's an incredibly important country in relation to global trade. So the issue is to have certainly multiple trade partners, including China and India, which are incredibly important for us. We should be moving more rapidly with the free trade arrangement in the continent, particularly in relation to manufactured goods, from us. But China is an important partner. The problem is that, and where this helps, is that for many years, trade negotiations with China, the way it goes every year, whatever anyone says, is they labor line by line. Like, South Africa was in negotiations with China for years around beef. And it took years to come to an agreement. And even once the agreement's happening, it's tough to get the good into market. And it'll just be about beef.
Wow.
Right. So this, I'm just trying to give you the context of what it was like, say, say between, up until the COVID period, say. So, and I'm only using COVID as an example, but say in the 2010s, that's what it was like. Wine attracts something like a 15% tariff, maybe 15 to 20% tariff. So Chile sells their wine duty free into China, and we attract a tariff of maybe 15 to 20%, just to give you an idea.
Yeah, interesting. I was going to get into this, the sectors that actually stand to benefit from this in terms of duty-free access. Are we likely to open up other sectors? I mean, you were speaking about the likes of beef, the likes of wine, etc. Are there other areas and parts of our own economy that get to be opened up now to China, do you think, because of this?
Well, what should be enabled we have a lot of agricultural products that go into China, everything from stone fruit to avos, citrus, rooibos, dairy, wool. I was referring to beef. Beef is an important one. We would like to be selling more wine. It's a growing market for wine. There's a growing professional class in China, major cities, they have wine shows and so on. It's an incredibly important export. Our wine is significant. Well, maybe I'm biased, and I've spent a lot of time in China, by the way. Our wine, compared to Chile, sorry, I don't mean to offend anyone from Chile, but you can't compare. So, ours is much better, I mean. So, macadamia nuts and high value agricultural products like that should be getting better treatment in China.
Yeah.
We would like, conversely, there's other things, benefits we're hoping to get. We're hoping to get investment from China in areas like steel, local automotive production, and we should talk about autos in this show because it's incredibly important, and topical
Let's do that.
chemical investments, renewable energy, etc.
Yeah, look, we have run out of time actually, but let's just very
Oh,
quickly. Chery taking over that
yeah,
Nissan plant in Rosslyn in Pretoria. That's a big deal because
yeah.
South Africa is really big on the automotive sector.
Okay, so this is a really important point, particularly for your viewers right now, because it's very topical. So I hope you'll give us just like a few more seconds. Um, so Chinese imports to South Africa in automotive manufacturing is a very sensitive point. There was something like a 75% surge last year in Chinese imports.
Yeah.
In January, I think it's Chery that has exceeded VW in South Africa now. So it's about 20% of the market. The Chery investment in the Nissan plant in Rosslyn is incredibly important. One of the sensitivities, it's not the thing that the Chinese are selling here, it's that they're not producing in the same way. And I've been engaging with DTI, I've been curious about how that's working right now. I'd love to talk to you again about that when I'm a little bit more informed. But the problem is that the Germans and some of the other companies are manufacturing here, and that's how the program works, whereas the Chinese are mostly importing, or even if they have got a plant, they're bringing in um, uh, completely knocked down kits. And so
Yeah.
the problem is they're not really, sorry, semi knocked down kits. So they're not really particularly manufacturing here. So we're gonna have to up the game around making sure that if the Chinese are selling in the market, that they're actually manufacturing here. DTI is looking at a 50% tariff
Sure.
on Chinese cars for that reason.
Wow.
So that's a really topical element within this. A lot of jobs are on the line, and we're going to have to get a grip on that. So that may be a contentious point in this whole agreement.
Wow. Yeah, I think that's actually a real bone of contention that could be at play here. Mirriam, we've got so much to actually talk about when it comes to this. Let's do it again sometime soon, please.
Okay.
Economist Dr. Mirriam Altman joining us as we just talk about that working visit from South Africa to China to really get a sense of the collaboration and the cooperation between the two countries, and perhaps better trade between the two countries as well. When we